Today is September 22nd, 8 o'clock on a Sunday morning. I haven't done a video in a while, so I figured now would be a good time to just check in and just show how my portfolio is going, talk about what's going on in the markets, and kind of go from there. So as you can see, the reason I haven't really been doing any updates is because the market has basically been just, I wouldn't say flat, but very volatile, but going nowhere. So as you can see, these lines, this red line and this green line, which represents the 20-day exponential moving average, which is the green line, and the 50-day exponential moving average, which is the red line. These are basically flattening out, while as you can see, the price here of QQQ is just like very jagged, just going up and down. And I don't want to be following that. The goal is really, if you see the yellow line, which is the exponential 200-day moving average, you see that line is just slowly going up. And that's the general idea that I want to see for my portfolio. So I am not going to really follow this jagged action. I just want to maintain a nice steady outlook. So how does this look on when it comes to my portfolio? So if I do a complete, actually first, let's look at the performance. So you can see that year to date, the NASDAQ 100 is up 17.63%, the S&P 500 up 19.5%, and my portfolio is 16.59. And the idea is that I follow closely the NASDAQ 100. If it goes down too much, I don't want to go down as far. If it goes up, I want to be just under or a little over, because the whole idea here is that I am not using all of my portfolio to accomplish this. Really, I'm only invested maybe about 30%, with everything else sitting in cash. So looking at the allocation of my portfolio here, just so that you can see it a little better. Right now we have a little bit of UPRO, which is a 3 times leverage S&P 500, just so that we don't miss out. We have TQQQ, which is a 3 times leverage QQQ, which I was just showing on a chart. That is at 29%. And the idea is that I maintain UPRO under 5% and TQQQ under maybe about 35%. If it goes over that, then I will start to trim. If it goes under maybe 25% or so, then I will start to add. And everything else is basically sitting in cash instruments. So last week, a lot of this was in a Goldman Sachs 5.4% CD. However, that CD got called away from me. And right now I'm sitting in this MVRXX. The 7-day yield on that is 4.99%. This week, the Fed officially cut rates by 50 basis points. And the outlook is that rates will continue to go down. We can see this if I move over to show the rates that we can get now. Just before that meeting, this rate was around 5.1, maybe 5.01. All right. Previous videos, you can see all of these rates were at 5%. And the Fed said that in 2025, the expectation is that rates would be at around 3.5% or so. So as you can see, if we look at the 2 years, right, the 2-year mark is 3.6%. So eventually, these rates are going to go down. When rates go down, though, the idea is that people don't have anywhere to sit anymore to earn the good interest. So they will go back to equities and stocks will go up again. And the big question is, will we have inflation again? They've been saying that it has been coming down. Once prices go up, sometimes they're very hard to come down. So the big question now is how to invest in this new rate environment. And really, we're just going to wait and see. Maybe 2 years ago, rates were 0%. So, yes, they're dropping from 5% down to 4 and eventually down to 3.5, but that's still good. You can still earn something more than inflation, but in the meantime, you do have to have something invested so that you can have this nice smooth growth over a long-term period. So that is all I have for today. Hope everyone has a great week and we will catch up again soon.